Yeah, I think there might be a divergence within like residential stuff, which you guys work with, and then the commercial assets. Like I haven't seen the run up in prices in commercial assets, maybe like a quarter point across the board of cap rates lowering, which by the way to you guys means that the prices are going up and the cap rates of what they sell for go lower. But nothing nearly as like the residential realm. That's why I'm like, I lower my like waterline for like people to buy turnkeys. To me, buying turnkeys make absolutely no sense
Yeah.
right now. But so if I were to understand how you're thinking and summarize it, you're thinking this is an opportunity to sell residential properties. What do you think? A lot of people in the middle of the pandemic, in the summertime, were creating a lot of videos, the YouTubers, God love them, right? They're always doing those tweetable or those
Uh-huh.
SEO terms where the world's going to end. There's going to be lots of
Yep.
foreclosures. Is that really going to happen? Where are you putting your money?
I put my money on that. I think there will be a big disruption. I think I was in Dallas, Texas last week for a couple of conferences, had a meeting with a manager of $1 billion fund. And we were talking about what they're thinking. And it lines up with what I'm thinking. This cycle will end. And we're not sure if it's going to end in 6 months, 12 months, 18 months, but this high end of the cycle will end and then it will go the other way. And in the manager's words, it will lead to an extended period of depreciation and we'll see these prices steadily decline. And his thought was late this decade. Our economy is really weak right now and the fundamentals are not good. I think there'll be some significant challenges ahead. They're not reflected in the current real estate market, but at some point they will be. And most of the rosiness today is the result of a good chunk of it is government intervention, which is the record low interest rates or near record low, and then all the stimulus money that's been pumped into the economy over the last year. That's been, I think there'll be another side to this that will pay for it. I think about 2005, 6, 7, it was such a dramatic run up. There had to be a turn, and eventually it turned in late 07 and through 08. And it became people were at that point, we got to 09, 10, people were looking back at 07 and 08 and 06 and thinking, what were they thinking? Why did they think this would keep going up? Why were they paying so much for houses? And I think right now, fast forward a year, 2 years, 3 years, at some point, there's going to be people looking back and saying, what were they thinking in 2021? People are paying for assets, be it a mortgage or real estate. I'm happy to sell into that market. In fact, I'm thrilled to sell into that market, but I'd be really scared as a buyer having to buy. And I know talking to some of the funds, they have to buy. They have money, they can't not use it. And so they have to buy. They're buying with expectations of very modest yields, like low single digits. That they're getting 4 or 5%. And that is not even 3.5% people. It's better, either they have a super cheap cost of capital, which some of them do, or it's better than not investing the money at all. But I'd be nervous if you buy something and you're getting a 3, 4, 5% return, and then the market turns and suddenly you lose, you erode your principal. That would be challenging. So my thought, if you own real estate or you own a mortgage or any kind of type of asset, with the exception of probably hospitality or office buildings, which are probably, you sell in today's market, you probably won't do well. But everything else, by and large, not residential real estate, anything to do with that, I think it's definitely time to be